following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, back here for looking good, feeling good here at TFNN. At the break, at the half-hour break, we're going to have Bill Meridian from Trend Research out of Vienna, Austria. If you'll remember, Bill alerted us to the fact that July and August could be pretty nasty, almost in panic mode, and that's pretty much what happened. It bottomed on August the 24th. And as we come into today, we are still rallying. The Dow Jones is very near taking out the highs of that August rally and September rally. We're still at the 786 retracement in the New York Stock Exchange Index. We're very, very close to the 786 retracement in the S&P Cash. The futures last night, of course, went above it and up at the 1985-86 level. Sold off about 10 points and are now rallying back. Looks like they're ready to break out to a new high. And you can't stand in front of this thing, folks, if we get much above 1992, 1995 in the S&P, because you don't know how high it's going to go. Because we were assuming that this was going to be a high day on the 6th. We hit something yesterday, when we hit the 786 spot on in the NASDAQ, in the New York Stock Exchange Index, but the market didn't back off at all. It was, barely a slight correction, and as you can see, the markets this morning are even stronger. Now, one of the things that I wanted to bring, I need to alert you to, because some of these things, are global and you want to pay attention to them, but we did make the long-term daily 61% retracement on the German DAX. I posted the 30-minute chart in there, but that basically tells you where you've been over the last 3 or 4 weeks, and we did get right up to the exact 61% retracement. That has held so far. We backed off a little bit, but really not very much. If we also go over to across the pond to the UK, you'll see that we also this morning we did hit that just a tad above the below the 160 or below the 6,400 level in the FTSE. It was about 4 points off of that, and then it sold off about 60 or 80 points, which is really nothing, during that time. But that's neither here nor there. So that's what we're watching. So, it's the Dow Jones is the one that is really the strongest. That's the leader of the pack right now. That's in the 30 stocks, but it is a powerful little puppy, so you don't want to, stand in the way. There's no question about it. Now, a couple of markets that we have a really strong interest in are the gold and silver, and we want to talk about those for a little bit here because, we've broken out 3 days ago in the silver market. We related that to how it looked very similar to what was happening with sugar, and so far that's exactly what happened. We're getting very, very close to the price objective. We broke above $16 an ounce today in silver, and it's hard to believe that just less than 3 weeks ago we were trading at $2 an ounce under that at $14 an ounce. Someone's had several people over the last few days call and thank me for having them to buy these silver rounds when they were down in that $14.50 and $15 level. And folks, I don't, I like buying those rounds just because they're beautiful coins, and they are, to me, they're real treasures. They're just really beautiful. They tell a good history of our country and stuff. I prefer to buy the silver dollars, and you can still buy those, really, really cheap. But the silver rounds are also really cheap. But, I've always been lucky with those over the years. So when they get down to that area, it looks like a good thing to have. And, the way the economy is these days, God only knows what happens. You see some of these internet sites where they say, cash is going to be, taken out of our hands and everything's going to be electronic. And boy, if that's the case, then George Orwell is going to be right on the money, because that means you're going to be looking at some really weird stuff out there. It's going to be 1984, all over again. So we just hope that doesn't happen. But the news is always, overblown when you do that. So this is a bear market rally. Even if we take out these highs, we're just going to go up another 50 points or so in the S&P, and another 300 or 400 or 500 points in the Dow, and then we'll probably have another cycle high if we exceed these levels today. And it has a real strong probability of doing that, by the way. Now, last night, my good friend from Germany, Andy Fink, sent me a chart showing the three drive to a top pattern over the last several days in the E-mini S&P when we got up to this 1987 level. We sold off to 1996, and then we've since come back, and we'll be challenging the highs here, right after the open. But we could easily expand this to go a lot higher, and that's the reason for that is the market is breaking out to the upside, and we have to respect that, because markets are seldom wrong, but men are often wrong. Those are the words of Roy Longstreet from his classic book, Viewpoints of a Commodities Trader. And he's a really bright man, and I was fortunate enough to know he and his son Bill. Okay, now, we have a situation now in the Treasury bonds. We've gone down, and we've taken out yesterday's low by one tick so far. I don't know if this is going to hold it or not, but there should be some pretty strong support down in that area, and whether it's going to be a support or not, we'll have to wait and see. Now, we just had something dramatic happen here. We just had a $10 break in gold, and this could be very significant. The fact is, I had my stop in there, and it hit me right on the money at 11.44. So I am out of the gold market, and haven't had a chance to check and see what silver did. But silver backed off about 10 cents. So this might be, a really key spot here in the gold, because we just went up to that, that long-term downtrend line that we've been watching for some time, and it just tagged it by a little bit, and silver has not hit it. But a $10 break that quickly in gold, that has to be some pretty good selling, in my opinion. I was long gold from, quite a bit lower, but the fact that we've held that level on the downside, neither here nor there, I don't care. I prefer to be cautious here and wait and see, what happens, because everybody might want to be putting their money into stocks again, and I don't want to get involved in that on the blow up on the upside. We certainly don't want to, stand in front of a freight train, as it's going. As opposed to what we're looking at in the bonds, I wanted to show you the support that I'm looking at here in the bonds, because it does have some pretty good support after we hit that 160.20 level. We've backed off just about 4 handles, and we're right into near the 61% retracement of the move from back on the 27th of September. So it should have some pretty strong support at that level. And you can see when bonds go down, stocks go up. This is what's been happening for the last 7 or 8 days. So there's a big, meandering or jockeying around for position in both stocks and bonds at this present time. So we want to watch that also without, giving up too much. But the key here is to keep an eye on what happens at the end of the day today, because we close really strong again, and believe me, we are going to be strong on the open. There's no question about that. The $64 question is how high we're really going to be, and that's going to be the real key to what we're watching right now. We're up 13 in the S&P, 37 in the New York in the Nasdaq, and we're up way over 100 in the New York in the Dow E-mini futures. So the key in that Dow E-mini futures, that old high came in at 16,838, and we're at 16,800 and change right now. So we're within a heartbeat of that, which we'll take that out most probably on the open. Now, whether that's going to be a false breakout to the upside or not, we have to wait and see what God thinks, and when she lets us know, we'll have a pretty good idea. But right now, it's still early. You got to wait till, just like yesterday, folks. We had that first hour bust, really strong buying, and then the market really started to roll over. And that's, right after that first hour, the S&P gave up 20 points. And, the Dow gave up 150. The NASDAQ gave up 70. Now, it's got it all back and made new highs, which telling you that cycle isn't finished yet. And, it was due to come in either the 5th or the 6th, with 6 as the major date. The Bradley date was the 5th, and it only has a 2-day window. So today's the day. It's, that's pretty much what it's looking at. But we're just watching it, very, very closely now to see what happens, and I don't know. The reason someone's asked me a question about why I raised my stop up so closely in the gold, and I talked about that earlier in John Logan's show when I was covering for him, is because of the fact that when we broke through that trend line, when silver broke through the trend line, it rallied $1 an ounce, and gold did not do that. Gold just, tagged that trend line up at that 1148, 1149 area, and only went $5. And look how quickly it gives up 10. Now maybe that's, it's maybe a great buying opportunity. I don't know, but I get a little nervous when I see that happening. So we'll have to wait and see. And also, things you want to remember is, market that can give you 300 points in a day, like the Dow Jones gave us on Monday. Will certainly can take 300 points away from you. So these markets react very violently at times. So you want to keep in mind that that's what you want to be looking at. So I think that's the important thing to pay attention to. I don't believe this, but I didn't get stopped out of gold. I had a stop at 1144 even, and it went to 1144.10, and they missed me. Are you kidding me? They never do that. Whoever they is. Well, my stop's still there, so we'll see. I can't believe that. Wow. I just assumed when I saw the beeper go off that I was filled in, and I checked it. It never really hit it, so I'll be darned. Okay. Someone's asked a question about, our good friend Mike from Thailand, about why the Bradley date today. It's actually, it's October 5th or 6th, and it's basically a component of about several different cycles that come together. And that's really what we're looking at when we watch these things. And believe me, these Bradley dates, they don't work all the time. They have a pretty good probability scheme when they do work. But frankly, when they don't, they just go up to the next one. They're like phantom cycles that don't even exist. This is a big one. This is why I would be really surprised if it fails. And if it failed, it could fail really badly. And so you have to be, really careful. And the other thing is that, this could be a trap, too, because if they get the Dow Jones above the old highs, everybody thinks that the party's just starting, and that might not be the case. So just be patient today, and, if you have stock to buy, you don't want to buy after 4 straight days up. At least I don't, but whether that happens or not, we'll have to, wait and see if that's going to be the case. But we will be starting sharply higher this morning. I don't think there's any question about that. But
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I wanted to talk to you a little bit about the gold and silver here. I posted the silver chart in, and you can see, the target they were looking for. We broke above that trend line quite a bit. Now, we haven't really did very much with that. Now, the gold, on the other hand, doesn't look nearly as well, and that's one of the reasons I'm a little nervous this morning, is the fact that, we went up and we touched that old high that we had way back on the 27th of September, and we did not, go above it by more than a little bit. There should have been a lot of buy stops at that level, I would think, and that didn't happen. So I'm just being cautious. If I have to buy it back again, I will buy it back at a higher price if needed. I prefer to buy it back at a lower price. I want to see what the correction is going to be, if we get this. But we only made a higher high in silver than yesterday by 2 pennies. That's another sign that, the market wasn't really screaming like it had been the last few days. So when that momentum slows like that, that's really what I'm trying to avoid, getting into that quagmire. But the fact is, I didn't get stopped out of the gold yet. I know I'm close, but I'm sure that it'll probably get there. And I'm not worried if it does. I'll book a little bit, and we'll see what happens and go on to the next one. The euro has been extremely predictable over these last couple of days. All we've done is go up and down into just absolute perfect harmony all the time, and it's continuing to do that also today. So that's a really great thing to trade if you're interested in in trading something that is the best thing in the whole world to trade because it's the most liquid of all the things you could ever trade, and it follows these numbers in the Fibonacci summation sequence, extremely well. So we'll look at that as we go through these times. Now, we've been very bearish the Canadian dollar for quite some time, and we're expecting that to continue to the downside. One of the things that I was asked to cover today, I did it earlier in John Logan's show, I'm going to do it again now, and that is when markets are really strongly trending, whether it's stocks or some of this, silver, gold, whatever it happens to be. This happens to be the Canadian dollar, and you can see that we're down about, we're in the eighth day down, so we're due for a rally anytime. But if you'll notice that all the rallies that have happened over these last few days, there's been 4 of them, and they've all been about 75 pips, which is $750 in the Canadian dollar. But you saw it 4 times. And then the first time that the market will probably bottom is when you see that first rally that'll be more than 75 pips, and that'll tell us that the market is potentially, turning. But this market had a beautiful 3 drive to a top pattern up at the 134.50 level, and it certainly held up extremely well, at least from the downside. So we'll be watching that one very, very closely. Question arises, do I think that the market is over in the gold and the silver? No, I don't do that at all. It just could be early in the day, and then maybe they shake out a few weak holders like myself, and I could certainly put myself in the weak holder category, because if I put my stop, just a few dollars under the previous pivot low, that is certainly playing it close to the vest, and I'm playing it close to the vest just because of the way that it potentially did not break out, because I didn't see the move happening very strong in silver this morning, and the gold certainly had to struggle to get up to 1154, and it could certainly break out later, and if it does, I'll probably buy it back. But right now, I'm going to stand aside and just see what happens. My interest now is I want to see what happens to these first few hours of trading, especially the first hour and a half, to see how much oomph we have in the stock market, and we're going to have a bunch. There's no question about that. We're going to be jumping around quite a bit. We got the Dow up 112 points, pre-market, the S&P up 12, the NASDAQ up 34. So they're rocking and rolling over there in River City. So you got to just pay attention today. Keep your antlers on, because we have a key cycle date today, yesterday. Might be a day late, but it ain't going to be 2 days late. That's for sure. It's that accurate. Anyway, we're going to have Bill Meridian on from Trends Research at the break, and I'm going to just turn it over to him because he's a really, really nice guy, smart as a whip, and he really knows what's going on. If you have any questions, if you'll type them into the room, or you can call 877-927-6648 and ask Bill any question that you might have. He's out of Vienna, Austria, which is in the middle of the afternoon over there. I think it's about 3-something. And we'll see what happens around that time. And the other thing is to keep an eye on these bonds, because they should be really strong support at this 156 and change level. And we'll see if that's going to be any help at all. And we'll go on to to see if that's going to be the big case. So longer term, I don't see how we can't be bearish, but right now it looks pretty good starting this morning, just like it did yesterday. And then we'll see see what happens when they happen early in the mornings.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, boy. Okay. We have our good friend from Vienna, Austria on the air. Bill, are you there?
I'm right here.
Having a very bad phone connection here, my friend.
Okay.
I think it's a little better now. Go right ahead. Bill, I don't have the charts. I thought that they had been sent to TFNN through Skype, but evidently I was mistaken. Is there any way you could post them through Skype so that the folks could see what you're what you're looking at?
I had emailed them to you earlier.
I don't have them. Maybe I would never delete anything from you because when I see your name, I respect everything you do. So I just didn't get it because I'm looking for it and I didn't find it anywhere.
Okay. Well, I am.
Wow. Boy, this is really a bad connection from my point of view. I don't know. I'll let the folks at TFNN tell me how your If you just want to discuss what you wanted to talk about, Bill, or if you prefer, I could have you on at another time to make it easier. Which would you prefer to do? And I can't hear anything, so I'm in the dark, which is, I'll just shut up and let him talk. How's that? Go ahead, Bill. Oh, well, I think I've lost TFNN. Can anyone hear me? 10-4? 10-4? 10-4, Rubber Duck. There's a... Okay, well, that's good. Well, we'll see. See what's going on. Okay, well, unfortunately, we lost Bill. I guess we'll have him on at another time. That was my fault, folks. I messed that up. I'm having a tough time with internet connection anyway, so I'm doing this on a landline because Skype's not working very well, so we'll just walk through this. But we are getting ready to take out that high in the S&P. E-mini is, and that high is at 168.38, and I think we're very, very close to that, right now. So we got up to 168.17. So we'll see if that's the case. And NASDAQ is still a little bit weaker, but it made new highs last night also. So we'll see if that's going to be the case. The key to watch is the New York Stock Exchange Index. Yesterday's high was 10,200. If we close above 10,200 today, I'm assuming that the situation in the bullish part of this is certainly not going to be correct. And then we'll have to, see what's going to happen from that point of view. We're having good action today in the gold miners. The gold's been up several days, and so people are finally, jumping in to buy the gold miners, which we've been friendly to those for quite some time. They are starting to move up a little bit. The $64 question is whether the gold and silver are going to continue this move or back off for a day. Now, they've been up for 6 days or so in the silver, so a normal pullback of 40 or 50 cents would be, nothing unexpected. And you certainly want to watch that because a 382 retracement would be a really nice place to take a look at the long point of going long silver. And remember, we went from 1392 to 1602, so we rallied over $2 an ounce. So a 38% retracement would be about 70 cents, and that would be a good place to possibly look at it. We'll be watching that, and maybe if it does it in ABCD format, we'll be able to do that. We've got Bill back on the air now. Are you there, my friend?
Yeah, I'm right here. Yeah, I'm sorry. There was some internet connection.
Why don't you go ahead and talk, and I will shut up, and we'll just go from there. How's that?
Okay. I have emailed the graphs to you, and I have also Skyped them over to TNN. But you were just
okay. Then we'll get them into the room. So just go ahead and talk about the first graph, and then we'll put those in as we go through, and then we'll be go right ahead, Bill. You've got the mic.
Okay. I just wanted to mention something. You were talking about gold.
Yes.
Yeah, I think it's going higher. Jupiter and Neptune have a very strong effect on any inflation hedge, not so much on stock markets or equities. And Jupiter has been opposing Neptune, and that is traditionally been bullish. And I'm just trying to pull up, since this was not part of the presentation, but you mentioned it in my last report, I did print the graph, and I want to get it in front of me because it is extremely interesting that these oppositions, the 180 degrees, is usually followed by a rally in gold. But it does not happen on the day of the exact opposition. It happens sometimes later, which got it in front of me now. It happens this time about, it looks like about October 18th or 20th. That's the accelerating portion of this cycle. And in fact, its effect, here, I've got it right in front of me. It's risen in all 7 cases. And it's a 13-year cycle. When they're 180 degrees apart, which they were on September 17th, gold has tended to simply hit a low. But the acceleration usually begins, and this is a point I wanted to make. The acceleration usually begins a few weeks later, which for us would be from October 15th to November 30th. It's happened. So in other words, gold has risen in all 7 cases from 25 to 45 days after the exact aspect by an average of 7%. It's done this 7 out of 7 times. Now, let me just give you a bit of explanation. The data that I'm using is from my friend Ted Earl out in Tucson. I don't know if you know Ted. And,
yes, of course. I live in Tucson. I know who he is, yeah.
Okay. And he has a continuous database of gold from about 1860 that's daily. How did they do that? Well, they just went to countries where gold price was not controlled. And they extracted the data, they converted to dollars, and they spliced it all together. So I could do that, or I could use silver, which was never controlled, and I'm going to get the same results. So I just wanted to support what you were saying, that we should see a sharp acceleration here, October 15th to November 20th. Or actually, it's November 20th or 30th. And let me add a few things that if you look at the solar cycle, which is the seasonal cycle for the year, gold usually gets weak in the second half of October, but I stated that it would not, because this cycle will override the normal seasonal tendency to decline in the second half of October. So number one, these effects don't always happen on the exact aspect. If you look at the exact aspect, it might be sometime before or sometime after, and you might miss something pretty good. And in this case, because this has happened only 7 times since 1861, it overrides the normal seasonal tendency, which happens every year. And so the cycle has provided a profit. I have about over 70% of the time.
Well, those are good odds.
So no weakness in gold, and I doubt very much gold is going to go much below 1090 or 1100, because my friend over in England, Tony Plummer, has pointed out to all of us that from the low in 1933 up to the last high, that is about, I think, a 50% retracement of 38. I can't remember exactly which, but it is a major Fibonacci support level. And he said to go through that level would imply that governments are all going to go to Ludwig von Mises School, and they're going to curb their spending, and they're going to realize they were bad boys and retire all the debt. And my audience in Abu Dhabi said that will happen when camels start flying. So I don't think gold is going below that level. And of course, it just bounced off of it.
Okay, well, that's very interesting. What do you see in the stock market right now, Bill? Everyone wanted to thank you for your July panic cycle that you gave us way back in May. That really worked spot on. So what are you seeing now in stocks?
Well, in stocks, I had this. My feeling was the market's probably going to bottom before any of us thinks that it will, because if you look through, I look at lots of opinions, and there is such an animal as contrary opinion if you go contrary to opinion and not to facts. And everybody seems to be looking for the same thing. They're all looking for another drop down like ABC or 1, 2, 3, 4, 5. And I was saying, gee, I don't know. I said one of the most accurate indicators ever developed was the bullseye indicator from Ned Davis Research. It has 2 components, liquidity and sentiment. If you have a tremendous amount of liquidity and lots of negative sentiment, the market rallies, and that's what you have now. There's no fundamental input, no volume price earnings ratio, GDP, nothing like that. Mm-hmm. And I think we have plenty of that. And I'm looking at this and saying if it goes any higher, in Elliott terms, you're sort of negating any further downside. In fact, that could happen in the next couple of days. And so I'm more bullish. And by the way, the average low in any year is October 27th. But I did a study since 2000. It's moved up to October 7th to 9th. And the average high of the year has backed up from September 5th back to sometime in the 2nd or 3rd week of August. So it's like that whole seasonal downward move has backed up. And instead of extending from early September to late October, it's now sort of mid-August to mid-October. So I think we're much closer to a low. And one of the things to keep your eye on is the value line index, because it is arithmetically weighted, which means every stock has an equal weight. And it was down 8.4% before this decline began. So that tells you that the average stock had already lost almost 10% before the decline began. So I think we've been in a rolling correction that started much earlier. It started back in May, June, July, somewhere back there, and it's already taken its toll on most stocks. So, and I'm looking for a strong fourth quarter, and I think, Larry, you're familiar with the graph of the 1, 4, and the 10-year cycles added together. And that bottoms in late October, but as I said, these cycles have been shifting forward. And so the point of the 1, 4, and the 10 is that they show a strong fourth quarter, which I think will be led by technology. So I'm advising clients as of late last week. I started telling, it was early last week, I started, selected stocks like Nike, Paychex, and ADP, Automatic Data Processing, I think have already bottomed and are headed much higher in Q4. And so I think there's going to be now more risk being out of the market if you're a fund manager, because everything you look at, as you know, all the sentiment indices are incredibly bearish.
Yeah, they, the market certainly tells itself that it certainly wants to move higher. You've got breakouts in the Dow's just taken out the high from the last high that we made in the future. So that in itself is a really big move too. So we're starting to see, and we're breaking, key points in the DAX and the FTSE and some of the others. So it's really hard to stand in front of this from the short side. That's for sure.
Yeah, and you had mentioned the panic cycle in the presentation, which I had sent over. I had just came back from Zurich and London, where I did presentations. I presented this, and it's interesting because you can read a lot if you read, for example, David Stockman, or you read just about anybody. It's easier to say there's a panic coming, and eventually, you'll be right. But as I pointed out, what Cycles Research is, I try to nail. I was a fund manager with the biggest fund in the world for 13, 14 years. And so I put a lot of effort into trying to at least nail these things down. And I have a friend in Hungary who says, well, at least you can get some sort of a knowledge of the distribution of these events. And most lows have occurred in the autumn, most panics have occurred in the autumn of years ending in 7 or 8. That's about 25 to 30% of all panics. All panic months are in that time period. And there just aren't many right now. But what it does show is the panic cycle. And again, if we can get the graph up before I go, that would be great. But I can just tell you that it's still declining. So that what that means is when you look at the news and you see, as we did earlier in the year, Greece, the world is going to end. No, the panic cycle topped in March and has been declining ever since. Then it was China. Well, that hasn't led to a panic either. It's when that cycle turns up, and especially when it gets high, that you have to start worrying. And the next major peak is in 2017. When do most of the panics occur? In the autumn of years ending in 7 or 8. So I would look to 2017 as being the next panic, and I do have more to say about where I think it will manifest, but I ran it out even further for the group in England, and it shows a higher high in 2020. Now there I would begin to be concerned for several reasons. One is the decennial pattern. Years ending in 0 have the worst returns in equities, and it is exactly 100 years for the depression they don't want to tell you about, 1920 to 1922. If you go to the Ludwig von Mises Center at Auburn University, you can download and read some very fine explanations that that depression was like 1845 and like 1929-30, in that the magnitude of the destruction. We have a break now.
Yeah, we have to break now, Bill. Listen, I'm going to post the charts for you, and I'll have you back in a couple weeks. How's that, my friend?
Oh, we're going off now?
Yeah. So that's my fault, Bill. I'll have to take care of that, but I will have you back on in a few weeks. But I'll post the charts in there for you with all your information. And
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, this is Larry Pesavento apologizing to my good friend Bill Meridian about messing up these darn charts. I'm going to post all of them into the room here in just a second. As soon as I get them done here, there's going to be a total of 7 of them, so that you'll be able to see what he was going to be talking about. I'll have Bill back on at another time, of course, but I do want to get those into the room, to let them know what's going on. Fortunately, we've got some really good people coming on with Tom O'Brien and Basil and the other folks, Steve Rhodes. It will really be, a good show for the rest of the day. But we want to keep an eye here. We've got the market really, really strong. Just like we've had several times where we did take out the high of the Dow Jones at that 16,000. 16,838 level. We got up to 16,840. And we'll see if that's going to be the case. The DAX index shattered the 61% retracement that came in at 10,060. We got up to 10,090, so it's very, very strong also. So whether this is going to be a turnaround Wednesday, I doubt it. But this is the last day for the cycles that I'm looking at, folks. I have the crow in the oven. It's being made into a casserole with lots of garlic, and believe me, I'm familiar with eating that. I'll have it with a nice slice of humble pie, and I'll move on to see what's going on. Fortunately, the Canadian dollar is working well for us. The euro's working well for us. And gold has worked well for us also. So I'm officially out of gold now. And we are going to see what happens with the rest of the day here. But I will be looking for another spot to add to the gold when we back off just a little bit. We've had crude oil breaking out, folks, of a monthly pattern. We've taken out that long-term consolidation. We made the lows down there the other day, and then they popped up and taken out that level at 49.50. We're trading at 49.38 in the oil, and we need a good close above $50 a barrel, and that would tell us that we're getting. And that might be the flavor that the Federal Reserve needs to see inflation coming back a little bit, and then they'll pop the old interest rate question of when they're going to add the interest rates, and we'll see if that's going to happen probably this week. That's my guess based on the strength of this cycle that we're looking at, astrological. And remember, it's just a probability, folks. It's nothing more than that. You excuse me, you can't put any more emphasis on it than the fact that it's only a probability.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.